In today's interest rate markets, let's take a look at the 10-year note futures as they're realizing some higher price action today. 10-year note futures coming off of 2 days of lower closes to bounce back today and trade right around the 106.12 level, which is at the top end of the range for today and really just off of the closing high for the week, which is 106.15 half. So really today's price action negating the selling pressure that we did see the last couple of sessions. And when you look at some of the driving factors, I think there's a couple things here at play today. Number one, GDP data this morning. Even though the headline number was stronger than anticipated, the PCE pricing data inside of that GDP release came in a tenth of a percent lower than anticipated at 2.4%. That is the Fed's preferred measure of inflation. And with that, we did see an uptick in the Treasury markets, followed by the 7-year bond auction in the middle of the day. Now, yesterday we had a 5-year auction that the bid to cover ratio and the demand wasn't very good. That created some selling pressure. Today, in the 7 years, some solid bid to cover ratios, and with that, I think that's another catalyst as to why we're seeing some higher price action in the Treasury markets today. Now, looking at the yields, 10-year yield is down 10.5 basis points today to 485 basis points currently. And when you're looking at the yield curve, really it's moving lower across the entire curve from the 6-month all the way out to the 30-year. Some higher price action, moving those yields lower today, and particularly in the back end of the curve where we're seeing some pretty heavy buying pressure, moving those yields back down towards the lower end of the range for the week. When you look at the 10-year, we did see a low just below 480 basis points. We're currently priced at 485 basis points, but well below that 500 basis point level that we did see just a couple of days ago.